Let me guess. You check your bank account, you see some money in there, and you think, okay, I'm not broke, but I'm also definitely not ahead. You make decent money. You're not reckless. You don't blow your paycheck every weekend. And yet, somehow, every month feels exactly the same. Bills get paid. A little goes to savings, a little disappears. And you're left thinking, how am I doing everything right but still not moving forward? If that thought has ever crossed your mind, yeah, this video is for you. Because today I want to talk about a single $100 habit that quietly predicts whether someone builds long-term wealth or stays financially stuck for decades. And no, it's not budgeting. It's not investing hacks. It's not crypto. And it's definitely not hustle culture. It's way more subtle than that. And once you see it, you won't unsee it. My name is Rayan, and I spend way too much time thinking about why some people build wealth almost accidentally, while others struggle for years doing all the right things. If you're someone who feels like your income should be enough by now, but your progress doesn't reflect that, make sure to hit the subscribe button and give this video a thumbs up if this helps you out. All right, here's the thing. Most people believe wealth is built through big decisions. Picking the right stock, starting the right business, getting the perfect salary, buying a house at the perfect time. And look, those things matter. But here's what most people don't realize. Those decisions only work if a much smaller habit is already in place. Without that habit, even high earners stay broke. According to Federal Reserve data, nearly 36% of Americans earning over $100,000 still live paycheck to paycheck. 6 figures, no wealth, which tells us something uncomfortable. Income doesn't predict wealth. Intelligence doesn't predict wealth. Even discipline doesn't, at least not in the way people think. So what does? It comes down to what you instinctively do with the next $100 that enters your life. Not your paycheck, not a huge bonus, just an extra $100 you weren't counting on, a tax refund, a small raise, cash left over at the end of the month. Because when that $100 shows up, people fall into 3 very different categories. And which category you fall into almost perfectly predicts your financial future. The first group is the spender. They don't consciously decide. The money just disappears. A few extra meals out, a nicer grocery run, a random online purchase. I deserve this spending. And look, this isn't irresponsibility. This is normal human behavior. Behavioral economists call this mental accounting when people treat unexpected money as free money. Studies show people are up to twice as likely to spend money they didn't plan on receiving. So the spender isn't dumb, but they also never get ahead. They don't feel poor, they just feel stuck. The second group is the saver. They feel responsible. The $100 goes into savings, emergency fund, high yield account. And this is already better than most people. But here's where it gets tricky. For many savers, that $100 becomes a trophy, not a tool. It feels productive, but it doesn't change their trajectory. Inflation eats it. Life eventually pulls it back out, and progress stays slow. Saving builds stability. It does not build wealth. The third group is the builder. This is where it gets really interesting. The builder sees that $100 and thinks, how do I use this to permanently improve my future? Not overnight, not dramatically, directionally. They use it to invest, pay down high interest debt, increase earning potential, buy time, create leverage. The amount isn't the point, the pattern is. Let's talk numbers. 2 people both have an extra $100 per month. One spends it, one invests it at an average 8% return. After 10 years, the spender has 0. The investor has about $18,000. After 20 years, almost $60,000. After 30 years, nearly $150,000. Same income, same $100. Completely different outcome. And this is why wealth feels unfair. Because compounding doesn't look dramatic at first. Then, suddenly, it is. Now you might be thinking, okay, I already know investing early matters. But this habit isn't just financial, it's psychological. Every time you allocate that $100 intentionally, you reinforce the identity of someone who builds the future instead of reacting to the present. And identity drives behavior far more than motivation ever will. Research shows people who see themselves as investors make better financial decisions, even under stress. This habit trains delayed gratification without feeling deprived. You're not saying no to spending. You're saying yes to leverage. And here's why $100 matters. It's small enough to feel insignificant, but big enough to reveal your instincts. $10 doesn't matter. 10,000 makes you overthink. But $100, that's where your default behavior shows up. And defaults shape destiny. Now, the most common objection I hear is, I don't even have an extra $100. And I get that. But this habit isn't about having more money. It's about what happens when you eventually do. Raises happen. Expenses fluctuate. Life changes. If your default behavior doesn't change, your outcome won't either. Over 70% of people increase spending within 3 months of a raise. Same paycheck stress, higher lifestyle, nothing changes. So here's how you actually build this habit. First, create a separate account or investment bucket. Name it something meaningful. Future me. Wealth engine. Do not touch. Names matter. Second, automate the first $100. Not the last, the first. Automation removes emotion. Third, define one purpose. Index funds, debt payoff, skill building, business capital. Clarity prevents backsliding. I've met people earning $50,000 who are quietly becoming wealthy, and people earning $200,000 who are panicking. The difference is almost never intelligence. It's what they do with small surplus. One group uses it to escape gravity. The other uses it to feel better today. And the scary part? Both feel normal while doing it. Wealth isn't built in dramatic moments. It's built in boring ones. In the quiet decision of what you do with the next $100. So the next time extra money shows up, pause, ask yourself, am I reinforcing the present or building the future? If this video helped you see money differently, hit the like button. Subscribe if you want more videos that explain money the way no one else does. I'll see you in the next one.